So here's a Bitcoin year in review for 2016. So for traders and investors, it's been a great year for us because Bitcoin has outperformed every other investment around. It's outperformed currencies, it's outperformed other commodities, it's outperformed the stock market. 2 years in a row, actually. And here's the irony with that. The year started off with the hernia. Many of you may remember when Mike Hearn rage quit after Bitcoin XT failed and said Bitcoin was dead. Bitcoin was on a downward death spiral. He had sold all his Bitcoin. The media jumped on board, coming out with articles, rest in peace, Bitcoin, it's time to move on, saying the reality came to light on January 14th when its influential developer Mike Hearn declared Bitcoin a failure and disclosed that he had sold all of his Bitcoins. The price of Bitcoin fell 10% in a single day on the news, a sad result for those who are losing money on it. And this, folks, is why you should never trade based on mainstream media, because that drop in 10% was the yearly low. This was the cheapest that you would have been able to buy Bitcoin for 2016. Now, smart money knew that this was a buying opportunity. And here's a great part about that. The price of Bitcoin over the course of the year from that point on has actually increased 174%, close to 175% in value. So, Mike Hearn, we salute you. Thank you for your sacrifice and thank you for the cheap coins. So, after that, we had a nice consolidation pattern, an ascending triangle. We had a huge breakout from that ascending triangle with some momentum. Now, a lot of legacy investors have been interested in Bitcoin because it's a non-correlated asset. Basically, that means that if you want to diversify your portfolio, it's good to have a mix between things that are correlated with each other, that move in tandem with each other, are inversely correlated, and things that are completely non-correlated, as in Bitcoin just does its own thing regardless of what the rest of the markets do. It's kind of isolated from the rest of the markets, and that's becoming more rare nowadays to actually find that true non-correlated assets. Except that there is one type of inverse correlation that I have noticed, and that's the devaluation of the yuan. Every time the yuan gets devalued, we've seen really, really strong Bitcoin bull trends because many people know that China is the market mover for Bitcoin price discovery. And so we had some yuan devaluation around here, and Bitcoin broke out this ascending triangle, went on this really nice bull run. China at one point actually had a 10% price lead, which was a great arbitrage opportunities there. And then what ended up happening was we hit a technical point of resistance. If we just draw a fib extension here, you'll notice that the price actually lines up with this fib extension pretty much right on the nose, right? And so Bitfinex lit the match. They lit the fire for this. We were likely going to correct or consolidate anyways, but Bitfinex stopped trading, and immediately upon that decision, the market started to dump. Now, again, another good dip buying opportunity and trade that happened. And so we longed a dip in the trading room. Now, some people were attributing this bounce play to Brexit, things like that, but I don't see any correlation with that at all. This was a technical bounce play. It would have happened regardless of Brexit, and I longed this dip, not even paying attention to Brexit. Then we had the Bitfinex hack, so another scar on the charts for us. Again, another good dip buying opportunity for a bounce play, so we had longed this as well in the trading room. And this descending trend line right here, the breakout of this is descending trend line, and I'd mentioned this on the first breakout on my website, that this was the first signs of a trend reversal, of an immediate trend reversal, right? So we started trending up since then on a bull trend. A lot of chop here around resistance, and then finally a nice breakout all the way up to 1,000. Now it hit 1,000 CNY on the Chinese charts and fell a little bit shy of 1,000 on the USD charts. But I attribute this to an organic boost in user adoption, and here's why. I don't think there's any one area geopolitically that is contributing to this, but I think it's a combination, right, of various tensions. Because if you look at money, money is just a medium of exchange that's backed by faith or backed by trust, right? So when you lose confidence, when you shake confidence in your currency or in your system, people look for alternatives, right? People look for ways to hedge. And so we saw that over in India with their large cash grab. So that was a huge event for India and Bitcoin. What they had done is they had eliminated about 85% of the money in circulation by eliminating the high denomination notes, rupees, and they didn't even have enough supply for everybody. So people couldn't pay for utilities, people couldn't pay for food and stuff like that. They did this as a cash grab, giving everybody a 40% haircut, or if you deposit over a certain amount, you'd get a 40% haircut. And as I said, they didn't have enough replacement notes. And so what we did see is we saw user adoption in India starting to grow. We saw trading volume and interest starting to grow. We saw Google searches starting to grow. And to add to that, we had hyperinflation in Venezuela. And they decided, because of course these policies are probably centrally engineered on an international level, Venezuela decides that they want to have a cash grab too. And so they eliminated their highest note, which I think was worth like 5 cents or something like that. Already from hyperinflation, people had to weigh their cash just to buy a loaf of bread. And so they just made matters worse. So again, local Bitcoin transactions increasing, Google search terms increasing in Venezuela and various other parts of the world. Japan, we're seeing record-breaking volume over in Japan. So they're definitely starting to turn into a market mover over there. So I just think it's a combination of various different areas. I don't think there's any one place where Bitcoin is really going viral, right? So here's what I think could happen right now on the charts, where we're at in the charts, and where we could go in 2017. Now, again, we're hitting another point of resistance with the fib extensions right at this level. If you were to use these fib extensions over on Huobi, you would actually hit this line on the nose. So it doesn't surprise me that we had a little correction here and we're consolidating. So far, buyers have still stepped in. So one or two things are going to happen, obviously, and it's good to look at both sides of the coin. Either we're going to have a larger correction and consolidate, perhaps creating another ascending triangle for a breakout. That would be the healthiest. I mean, this bull trend has been much, much healthier over the past couple of years than that huge parabolic spike we saw over in 2013 with the Willy bot and the China bubble, combination of those two. So if we consolidate and then break out, we'll likely break out of all-time highs. If we break out immediately, things could end up going parabolic, so we could end up shooting up and that would lead to a huge correction. Now, I think for 2017, we're probably likely going to see the trend continuing as far as user adoption is concerned. We'll probably see more users coming into the fold. We still haven't hit the consumer adoption phase yet for Bitcoin. All right, it's estimated, give or take, there's roughly around 10 million users. We don't know that for sure. There's no real way of calculating an exact number of users. But, there are only 16 million coins, a little over 16 million coins in circulation. It's just basic supply and demand, right? If we ever hit consumer adoption phase of, let's say, minimum 100 million users, then there wouldn't even be enough units of Bitcoin to go around for everyone. And that's okay, because a single unit of Bitcoin is divisible by 100 million. So we could see prices, if we do break the all-time high, we could see prices go much, much higher as more users come in. And a lot of latecomers will see the price at 1,000, and just like we saw in 2013, boost in user adoption every time the price goes high. It's kind of like the best advertising for Bitcoin. The only difference, though, or the main difference between now and 2013 is we actually have the infrastructure for user adoption. Back in 2013, it was very difficult to purchase Bitcoins. A lot of places around the world didn't even know about it. Security wasn't that great. Now we have hardware wallets, which are very consumer friendly. There are exchanges popping up all over the world, so it's very easy for people to on-ramp through their local currencies. So there's just generally a lot more infrastructure in place. And also there's been a lot wider mainstream acceptance as Bitcoin as an investment, right? You see Bitcoin in the financial news a lot, and you see a lot of legacy investors getting into Bitcoin. So if we continue on our current trajectory, 2017 should be a great year. That said, if the price does shoot off and shoot up too high and goes parabolic, that could trigger a reversal and another bear trend, right? So you'll want to hedge for that if that point ever comes. But for those who are investing in Bitcoin over the long term, over the next 5 to 10 years, then it's really just about seeing the forest from the trees. And, bear trends are still opportunities to accumulate through trading, right? So you can accumulate by shorting on the way down, buying dips, and then like we saw here, we had this sideways accumulation zone where we were ranging between $200 and $300 for a year, which is this was actually the first signs of the bull trend right here, this sideways consolidation that we had. So that's it. I wish you all prosperity and good health for 2017, and I will see you on the flip side. Cheers.